What's going on, guys? Benny Childs, founder of the Teach Me the Fish Effects trading community. And in this video, I want to explain to you guys why I think this 22R trade is going to work on the pound USD. Let's hop up to the weekly, and I hope that it's not too convoluted for you guys to follow along. But we just had the weekly to tap into this bullish order block, all right, which I'm going to classify as internal range liquidity. Therefore, I'm looking for external range liquidity to be the draw, okay? And not necessarily say that it's going to happen this week, but this is my draw on liquidity, all right? Let's drop down to the daily. The daily just tapped into a bullish breaker block, okay? We made this high, made this low, taking out this liquidity, and then we broke above this high. So therefore, our bullish order block is going to be the the last up close candle, all right, before this push down. All right, so we can see that Friday tapped into it, had a pretty strong reaction, closed above it. Let's take a look at the 4-hour. Okay, you see that the 4-hour just tapped into this 4-hour fair value gap, had a strong reaction away from it, right, showing us that it does want to go higher. Let's take a look at the 1-hour. Okay, the 1-hour swept this liquidity here to the left, right, and started pushing up and gave us this inversion fair value gap, showing us that the market does want to go higher. We hop down to the 15-minute. We really don't have much here. We did have a change of character right here. Actually, I would like to classify this as a 15-minute bearish breaker. All right, we had this low, this high, and the break of this low. So the breaker would be the last down close candle. All right, there, and we can see that price did respect it, even though it wicked out on the outside. Right, it did respect it, causing the market to go lower from this point here. All right. Now I was looking to possibly see if we could get a swing zone trade out of this, but we can't because the swing zone would be the high of this candle to the low of this candle, which is not there. But if we drop down to the 5-minute, we do see where we had this swing high, this swing low, and the equilibrium of that swing zone has not been traded down to yet. So when we take a look at this 5-minute swing zone below the equilibrium, we see that we have this full fair value gap right here that has not been tapped into, and it is below the equilibrium, making this a discount area. Right, so I would be looking for price to come into here and trade out with your stops below. I'd have the stop at the low, but you want to go at least two. Man, I haven't traded Forex in so long. I'm sorry. You want to go at least 2 spreads, right? 2 times the spread basically below. All right, for here, which the spread closed at, I'll tell you guys here in just a second. The spread closed at about 4 pips. So you want to, technically, if you're going to put a hard stop, you want to do 8 pips. So add 8 to that. So I'll give us 144. Okay. So in all actuality, that would be a non-R trade if you include the spread into that. I'm gonna take that off because I like clickbait. So we're gonna say 22R. All right. Hopefully this will be a protected low, and price will not exceed past that. So that is a 22R trade that I'll be looking for on pound USD this upcoming week. All right, guys, as always, I hope you all stay well and safe trading to you. Bye.